And that is the closing bell of the New York Stock Exchange. New inflation reports and announcements from the Federal Reserve made it a wild week on Wall Street. The Dow Jones closed the week on a positive note with a late rally. It is up more than 500 points.
The S&P 500 and NASDAQ also staged a late rally, up more than 2%. Terry Haines joins us now. He is a founder of Pangaea Policy.
Terry, big week for news on the economy. We had this Federal Reserve announcing an interest rate hike. It's coming up and coming today. The Bureau of Economic Analysis reported that a key inflation measure rose about, 5.8% in the last year? That's the biggest growth since 1982, right? So what are some of the ways the Fed can get a hold on the big, scary inflation that seems to be creaking in the rafters, so to speak?
Well, it's firstly, I think if people are looking for an immediate fix and a quick fix, they're bound to be disappointed, and that's no criticism of the Federal Reserve. But inflation has risen an awful lot more than anybody thought. So far, the central bank's response has been, I think, much more rhetorical, and there are a variety of policy tools that they can employ starting in March, including rate hikes, increasing the Fed funds rate, ending the so-called QE program, all of those sorts of things. But there's a lot of uncertainty in the markets because they haven't really dealt with this kind of inflationary situation, since, as you point out, the early 80s. And there's a lot of uncertainty around the Fed itself because you've got 5 of the 7 governors now up for renomination or nomination. So you've got a lot of people who, either aren't there or under pressure and are going to be cautious. And also the Federal Open Market Committee, which met on Wednesday, it, only had 8 of its 12 members. So you've got a bunch of folks here who I think are going to proceed cautiously and until they're confirmed. And they are clearly wanting to jaw a lot on the need to get things under control, and the markets responded to that. But I question whether what you're going to get is something like a Volcker-like response from the late 70s. I think that's not on the cards because the vast majority of people that are nominated for Fed governor positions will take a much more gradualist approach. So the specter of inflation, I think, is going to be with us for a while and only dissipate gradually is the best case. And
we saw that with inflation, it was sort of a parallel thing that the stock market, it soared while inflation was soaring last year. You mentioned some uncertainty. If the Fed is working to bring inflation down, is it just inevitable that we're going to see the stock market drop along with it?
I don't think it's inevitable. There's a lot of other factors that come into play here, not least of which is the labor market, is quarterly earnings. There are a variety of other things that will play in here. As long as the market looks as long as companies look, generally speaking, very strong, the market will continue to be strong. I think what a lot of people think, and I'm certainly among them, is that what changes is the kind of betting on the come that happens a lot. Companies that are unprofitable but look like they're going to be, great bets 1 year, 2 years, 3 years down the line. I think that's likely to pull back to some extent. And as markets look for more certainty in a very uncertain environment, both in terms of volatility and in terms of what Fed policy might be.
Realistically, how long do you think inflation will be a problem for us?
Well, I think the conventional wisdom is it's at least until through the first half of this calendar year, and I think probably beyond. There aren't policy tools that exist that would rein things in the next 5 months, frankly. So I think the public is going to see this persist well into the second half of calendar 2022 and probably beyond. This is going to be with us a while. The question is whether it's going to be with us in the same kind of balloon sense that we saw in the last 6 months or so. The current Fed says not. My view is that the uncertainty in the markets and the uncertainty among who the Fed policymakers are probably combined to make that go a little bit longer, certainly throughout 2022.
Terry, is this a natural progression Americans should be living with in the same vein that they've been living with these record profits and the soaring stock market?
Well, I'm not sure it's a natural progression. It is something they're going to have to live with for a while. We've seen the markets go up for quite a long time, but the inflationary aspect of this, really came out of nowhere, and I think came out of nowhere largely because it's unforeseen consequences of stopping the economy a couple of years ago and restarting. There's an awful lot of uncertainties, an awful lot of things that weren't anticipated to happen in conventional economic terms that have been happening, including softness in the labor markets, people quitting their jobs, that sort of thing. And it's going to take a while for a lot of that stuff to shake out. It is a testament to the economy that it is as strong as it is, and that it is as resilient as it is. But there's an awful lot of other indicators that are going to take a while to catch up. So I think folks are going to have to get used to volatility in their daily lives as much as in the markets for some time to come.
Well, I think over the last 2 years, if there's anything we've gotten used to, it is volatility in an ever-changing world that we are no longer used to. Terry Haines, thank you.